Good day traders, Stacey Burke from Stacey Burke Trading, and today we're going to review the pound yen and the pound USD from Friday, August the 19th, 2016, and just going over again, keeping your Forex trading simple and some basic concepts we talked about in the other videos. Number one, just trend line and pattern breaks. Number two, support and resistance or supply and demand zones, however you want to call them. Number three, staying on side of the 20 EMA momentum. And then number four, the highest priority times of day in terms of likelihood of the strength of the move. So basically Asia, Europe, London, Frankfurt, London, and the New York market opens and closes are where the volume and liquidity and activity surge, and there's a high probability to participate in those moves if you're day trading. Now these same tactics apply on end-of-day trading, except of course the intraday market time frames would not be as relevant. But if you're trading trendline and pattern breaks, support and resistance or demand and supply levels, and staying on side of momentum or strength, it's going to highly weight in your favor. So again, this is all just about keeping trading simple. I receive a lot of emails. People are looking for all these different ideas. I encourage you to keep things very simple as possible, so that therefore you can reproduce and duplicate any consistency in your results. And also you have a higher likelihood of being successful long term when you've got some sort of daily routine that you can follow through on. As you get better and better at these basic skills, you can then perhaps participate in other types of trading activities, but I would encourage you to master the basics. I talk about this on my 7-step daily routine. Trading doesn't have to be this, behind closed curtains insider type activity. The biggest place that traders fail is in our own self-awareness, our failure to execute properly, our failure to manage risk properly, and our failure to stick to one consistent approach to the market. So let's review this just quickly, and again we'll go over that. I'll put on some lines here. So again, going into the Asia Open, we see an indication early on of a possible pattern break, but again, I always like to let that market trade for a few hours beforehand. But if you were going to trade this market, you want to be trading in the direction of momentum. The market, again, just looking for areas where price congests around highs and the moving average and creates this coiling effect, and then boom, we see that explode out. Again, if you're going to be trading Asia or trading London, trading the New York markets intraday, you should be studying the ATR for each instrument for the day session. Be aware of how much perhaps potential the market is going to move on average each day, and also perhaps each session. So Asia traditionally is not going to have as much probably range movement as we may see in London, and then even into the US market open. So okay, so we'll call this I predominantly look for trades after the London Open. So if that was the case, I'd be defining my support level prior to this first hour of London, and again I would look for number one, a pattern break. Number two, I would look to define my supply and demand levels. Okay, and in this particular case, we saw London a breakout early into the session, and we talk about this between 2 a.m. and 5 a.m. New York Eastern Standard Time. The market will often make a high or low for that session. Now, it doesn't necessarily have to be the high or the low, but it could represent a buying extreme or a selling extreme in a large majority of the cases. So we see the market struggle to go lower as we head into the US pre-market. We see a pattern break, but we see that retest a previous level of supply or resistance. The market then proceeded to come back down, but then we get our little gift, which is where we see that coiling effect again in this moving average, going back into a demand level. We know we've got stops that are down underneath it here, and then the market builds up some pressure and then bang, explodes out. Again, there's another example of that in here, but early traders may have been able to position themselves into that break, and then again later on into the US session. So nothing too complicated. We talked about pattern breaks. We talked about support and resistance, or supply and demand, whatever you want to call it. Then we talked about looking for these coiling patterns inside of the moving average, staying on side of the moving average momentum, and then looking for that to break through a level and capture a move. So just take a look at the British pound, and again from Friday. So we see early in the Asian session, we see a pattern break, and we start to see lower highs, lower lows, to where the market retests the high, struggles to go any lower as we head into the London Open. We see what Bob Vollman would talk about is a tease break, and then a final flag, to where the market then came back through. And again, if you were chasing this trade, you definitely wouldn't necessarily have been wrong by trying to short this, but anytime you short near the bottom of a previous demand level, or buy something near a previous supply level, look for that to possibly end or go to break even once a lower high is broken. So as we see the market take a similar pattern to the pound yen, we see a tease break. And again, if you want to know more about that, read Bob Vollman's price action trading and 5-minute scalping books. But again, as we go into the US Open, we're just connecting the lows here. We look for a pattern break. We possibly, not sure if this is a final flag, but once that comes back inside of the moving average, we know that now that initial bullish run is possibly ended, and then we get a bear flag. Now this is another example of price coiling. It's just a different type of pattern. We know there's stops below that low. We're back in line with that original order flow from Asia, London, and now we see it presenting into the US Open. Traders staying on side of that moving average, trading that coiled buildup back towards the lows. As soon as it takes out the low, you'd want to be going to break even. And then as the market continued to move down, it gave traders a couple of more opportunities to possibly position themselves. The safer bet for me would have probably been somewhere as close as possible to that moving average. But again, we're just looking to keep things simple, traders. Again, pattern breaks or trendline breaks. Now, just to reiterate, none of these by themselves is a reason for me to take a trade, but I do look for that confluence of information to present. I want to stick to where my highest probability opportunities are, and this is a really simple way to trade the Forex markets. We look to see these types of moves every single day, but again, keep it simple. Study the market that you're going to be trading. Know it's possible personality traits and characteristics. But first and foremost, always play great defense and manage the downside. So hopefully you got some value out of today's video, traders. Keep it simple. Stay disciplined, stay focused, and may the markets go with you. Have a great trading week.
Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High-Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.